I'm going to introduce to you some of the basics that you need to know about the Forex markets. So when you're a Forex trader, that's one very important thing that you need to take note of. And that is what really moves the market, right? So a lot of people talk about the fact that fundamentals, economic factors are very important. But then there are so many events, so many economic events that can move the market. So all you need to do is just to focus on the main field that has the most amount of impact, and you can almost ignore the rest which has negligible impact. So some of the economic factors that you should take note of, for example, retail sales data, inflation rate, consumer price index, or some people call it the CPI. The few most important ones is the employment rate, which is NFP. Now NFPA stands for non-farm payroll. And the other thing is you need to take note of the changes in interest rates. So when the Federal Reserve announces a change in interest rate, that is when you need to take note of that particular news. So when the Federal Reserve conducts a quantitative easing, meaning that they will inject money into the economy, thus stimulating the whole entire economy. So when there's an increase in interest rate, very likely the value of the currency will also increase. And other factors that's going to affect what moves the market is political factors, and one of them you're already familiar with that, which is presidential elections. So let's say when there's a new election coming up, that's when you need to take note of the news. And the main thing that moves the market is actually market sentiment. It all comes down to the overall feeling among the traders based on how they perceive the economic factors and political factors. And of course, you have other things that would also move the whole entire market, which is, for example, natural disasters, earthquakes, tsunamis, and of course, you also need to take note of things like foreign affairs. Let's say today China initiates a new project, a major project. Then you will expect some countries like US to increase their exports. And when the US increase their amount of exports, very likely their currency will also increase. So how does this impact you? It means that you need to constantly monitor the economic calendar every single time when you trade. So where do you find the economic calendar? You can find it in various different websites. For example, Forex Factory, which personally I use. You also find it in other types of websites such as FX Street, Forex Live, Daily FX. So personally, what I would do for, let's say, Forex Factory, I would focus a lot on the high impact events. So if you go to the Forex Factory website, you'll see a lot of color codes in them, which is red, orange, and yellow. The red ones would be the high impact events. The orange one would be the medium impact, whereas the yellow ones would be low impact events. So who are the participants of the Forex markets aside from us retail traders? They are the corporation, banks, and countries. So how does the banks and corporations contribute to the liquidity of the whole entire market? Is that they are the ones who provide the trading volume, because they will inject large amount of capitals into the market, thus increasing the liquidity. High liquidity meaning that there's a high volume. High volume meaning that there are a lot of traders participating in the market. We retail traders only comprise a very small percentage as compared to the banks, hedge funds, and companies. So how do we profit as retail traders? We still can profit as long as we develop and follow a proven system that has an edge in the long term. And of course, when you have this proven system in place, we need to trade it with a very strong discipline in place. And of course, other than that, you need to have a very strong risk management plan in place.